What's up, guys? Yo, I know it's been a minute, man. I know it's been a minute. Been on vacation. A lot's happened. You feel me? Been on vacation, hanging with my girl, work, school, the whole shebang. That's all I've been up to for real. I still been active on Instagram. People have been hitting me up, asking questions, everything like that. And that's why I got this video idea from. Because I was gonna drop some more videos soon. I was gonna come out with the course soon as well. I just haven't, like the free course, just drop some free information, free knowledge for you guys. Um, but yeah, this today I have another Goldbach video for you guys. This time I'll just be running through some trades that I've taken, in the past, stuff like that, and just break them down and just talk about all of them. You know what I'm saying? So get into it. So we have this one. So all right, bet. So this is the first trade, right? I'm gonna just flash through all of them right quick because I want you guys to just look at all of them. All right. Second trade, third trade, fourth trade. All right. Now, what is something about all these trades that they have in common? I wish I should let this one run. But what is something about all these trades that they all have in common? What else they zoomed in? Right. They're all on different pairs, I believe. Yep, they're all on different pairs. This is gold, other one's US 30. Gold, gold. Actually, I do trade a lot of gold. So, what's something about all these pairs that they have in common? I mean, all these trades that they have in common. They all have a liquidation at a 29 time. So here we have, this is 1945, or whatever time this was at. I marked the Goldbach time out here. So this is the Goldbach. I can't zoom in anymore because we're not on live charts. And these trades have been in the past, so I can't go back and find. But this is the 29 time right here. Right. So you don't have to take the trade at the 29 time. It's something that a lot of people have been asking me. You use the 29 time to get the key high or low that you need. So for example, this high, this is the bias for this point. I'm gonna go through the bias for all of them. The bias for this one, right, was that price basically did a buy side sweep at a 29 time because this candle's a 29 time, this can like these are all these candles count as a 29 time. So it's just really which time does the liquidation. So this candle actually did liquidation as well. So you could have traded it here, but you didn't get the IFVG yet, which is why you have to wait till you get the IFVG. Boom. So now other things come into play here as well. So you have the IFVG, so you already know you're gonna definitely take a trade. You also get a market structure. So you get you get like a bunch of confirmations here. So this would be like an A plus setup. It's an A plus setup once you get the IFVG that gets liquidated or pummeled through, and you could tell they were actually reversing after liquidation. That's already A plus. This is like A plus plus because we have bearish momentum now due to market structure shift. Protected low has gotten liquidated. All right. So here, as you see, we have sales, and then as you see here, it came back up, retrace this big FVG. Could have took re-entries, took another sell here. Right? It's all in 1 minute. You know what I'm saying? Just little scalps. High probability scalping, right? You took profits at a take profit low or a liquidity low right here. Boom. Swept through it. Would have been out right here. I mean, all this happens, but you would have been out right here. Boom, you're good. So that's this trade. Same thing here. So I think I ended this trade early. I think I ended up still hitting take profit point. When trades stall out like this, that kind of means the momentum's like done. So that's why I took the screenshot here because I was out. This is where I got out at. I got out at this point right here, which is like majority of my target anyway. So I'd rather just take this than it reverse on me. You feel me? But anyway, so here's what we have. So this is like a continuation. right? So this is more of so of a reversal at a 29 Goldbach time, right? And this would be a continuation. So, and I'm not using no higher time frame bias for this, by the way. I'm just literally going off of what I see. So, the play for this one, right? We have, well, first we have bearish momentum, which is cool. We have the buy side sweep at a 29 time, which takes place at this bearish candle here. So you have a huge sweep. So if you guys watch my other video when I was talking about this, I don't like sweeps where it's the full body, like sweeps like this, because I realized they never reached the liquidity target at all. Like you see how here this would technically be a trade you could have gotten into because you would have had the market structure shift here, and then you could have took that. I believe this went down. But as you see, it never reaches the liquidity high. Like this would be relatively equal highs if you're looking bullish. This would take this out. Should take that out, which it doesn't do. So it's like I don't like sweeps with the body. Sweeps with the wick, I realized are like hot, very hot. Like here, like this is a fat sell. So first we're FVG, continuation off the FVG, sweep. This not at a Goldbach time, but like still like you get a sweep here. Boom. Like it just works out, you know what I'm saying? Like all of it comes together. Yeah. Back to this example. So with this example, right? Same thing. Bearish momentum is going on. You have a buy side sweep right here as well. Buy side sweep. We're already in the bearish momentum. We can say we're going bearishly already. This FVG. I use my finger like y'all can see. This FVG. So we're in a bearish momentum. This FVG here is being retested by this. It didn't respect it, but instead it did ran another sweep. So we picked a more gasoline here. Buy side sweep, added 29 times. 29 times this candle here. FVG, IFVG, reversal here. Boom, disrespected, confirmed it. This would have been like the small trade here. So what I did with this one, I let this one run. I remember. Let this one run, and I let it run to right here where it's stalled out at. When I start getting these candles here, that means the price is pretty much done with this, what it's supposed to do. So that's why I got out at right here, like I was saying earlier. All right, so that's kind of the same setup with this one. So as you see, they're very similar. I don't know how to put the IFVG mark here, but yeah, IFVG, boom. So 29 time liquidity sweep with the wick, not the body, but the wick drop down, takes out liquidity. Same thing here. Buy side sweep at a 29 time candle. Did the sweep, the wick. We took out sell side here, and then we just let it run a little bit past that. So this is the same exact trade as the other one. Same thing here. So, like I was saying, 29 time happened here. Huge push. You see these big wicks? These big wicks are telling you that price wants to reverse. Like you're seeing the push. You're seeing the market makers push back against the other people. So as you see, boom, huge wick, little body push. I mean, nice size body candle. Huge push though, bullishly. Boom. So 29 time, sell side sweep. This is sell side example. Sell side sweep, 29 time. Here's a FVG, turns into an IFVG after this candle close. It confirms it. Any inefficiency, meaning price is going to be drawn to this area. And then there's a buy side area here and inefficiency up here. So I targeted this buy side. You could have targeted this inefficiency here. As you see that now we're obviously bullish. If we were to take this out, we'd be bullish. But you see, we are bullish. But you see, it reached it. So that's another target I could have had. Didn't get greedy. I think this is already a one, almost a 1 to 3, and I already took a win for the day. So I just took it right here where it is. 29 time, sell side, same example. So the same example on gold, just a reversal of this one. opposite direction. So this is the buy example for you guys. Take out buy side, reach any inefficiency up here if you were to let it run. Boom. W trade, win. Right? And as y'all see, the times at the bottom, right? It doesn't matter when you trade this, by the way. So you see, this is like a setup in afternoon. This is like Asian. This is Asian session, guys. This is Asian. You know, Asian session, but we don't trade because of the Asian range. This is Asian session on the 1 minute. Asian session. This is London, Asia. Now this example right here is gonna be London. This is London as well, the end of London, because end of London's 5 o'clock. So I should let this run anyway, because this would have been the last final push at the end of the session. Anyway, same thing. So I don't have no markings on this one. I don't know. Anyway, I must have been tired. Buy side here, wick. This is a 29 time, by the way, because this is 430. So if you did, so it'd be like, 429, or this is probably 428, because you could add a -1. So 428, 28, take the minute part, plus 1, 29. So this would be a 29 time. Liquidity sweep with the wick. You're waiting for confirmation. Boom, you get the confirmation here on this candle. I've had prematurely, but if price would not have closed here and just like went back up, I would have just got out. But I was just trying to get a decent entry. So I got in a little prematurely, but it worked out because we got this candle, which means my bias was correct. So this right here is the IFVG. You see it came back up a little bit, dropped down, took out sell side. There's no target down there, which is why I took it. I just took the 1-to-1 win right here. I could have let it run, but I just took the win. I think I won this day as well. A lot of these trades I win multiple times in a day. So I'll take a trade earlier that same day and make like 400, 300, 400, and now I make another 300, 400. And it's like, good. Like, we're not going to keep sit here and try and trade every single 1 minute fluctuation. Even though you could, if you have a gold past a challenge and everything like that, you want to take the whole day to trade. These setups happen multiple times every hour. So you could. Of course, you have to avoid, if you're trading with a bar firm, the fourth lock time. And you have to avoid the 5 to 6 o'clock market close. But yeah, 7 p.m. Eastern Standard Time through the rest of the day, all the way to that time. Every other session, you could trade this. So it's really you got you think. And I threw some more examples in here for you guys. It took me so long to make a video. I threw some more in here for y'all, just so y'all could really get the gist of what I'm saying. Like, and these are more recent, so these are better marked out. I'll make sure I mark these out right. So same thing. This is London session. I had two sell side points of interest right here. It was a liquidity low on that side. And as you see, we're bearish now. We're having bearish momentum. We have bearish momentum. Check out the sell side lows, which is these lines to pick right here. All right, so same thing. Here we have a 29 time. 29 time buy side sweep with the wick, not nobody in sight. Literally the wick right here. Zoom in a little bit for you guys. Wick, right? So yeah, it gets this detail, man. Wick, buy side, technically. Wick, retesting this bearish FVG. And we also broke structure here. So I don't have that up here. But we're bearish because of this. Like, we're going like trend wise. This failed to make a higher high. And this higher low got broken right here. So market structure shift, inefficiency, buy side, 29 time. We're already bearish. So this trade is supported as a continuation within this area. IFVG, as you see, I marked it out for you guys here. So that would be this one right here. So IFVG here, disrespected, came back up a little bit. I was hoping, entered, right here. Then it ran up a little more, went back down, ran up a little bit more. But I was like so adamant about this trade, I stayed in it because I was like, yo, like this has to go down. Like everything's saying it's going down. We also had a price. I wasn't mad that it came back up because we had a bearish FVG here, bounce as a respect to this IFVG. So I knew that price was gonna use this. It shouldn't go no higher than this point here, because then at that point it's like it's not respecting nothing. So it respected this FVG and finally melted off. It just wanted to retest everything that was up there. So it melted off, made a lower high, and then just finally dropped off. So this trade, and this is on gold. Yeah, a lot of gold. Oh my god. Oh, this is just gold. I'm so sorry, guys. This is just all gold. All right. So that one was a little bit harder to see because everything's like crammed up. There's a little consolidation in London. It was like crammed up, but like same stuff, same technicalities, if that makes sense. Same thing here. Buy side. This is a 29 time. I'm not sure I'm working these out. This is a 29 time, or this is just a different gold bot. It's either a 29 time or gold bot time. I tell people use just the 29 times because that's mainly what I've studied. I think this was like a trade that I'm doing here that I just took because it was at a Goldbach time and it was part of the algorithm. But it was so clean that I just took it and it worked out. Because as you see here, we have bearish momentum, market structure shift, bearish momentum, right? So we have this clean high right here gets disrespected and swept here. Beautiful sweep, textbook sweep. IFVG here, disrespected by this candle. As you say, I waited this time. I wasn't as aggressive. I just waited because I still make my money if I wait. So I just usually wait now. It's just the boom. I waited. As soon as this candle closed, boom, got in right there. Caught this whole all the way down here to the sell. Boom. And this is gold as well. Same thing here. Gold again. At least I'm giving you guys buy and sell it. I'm sorry, this is all I want there. Gold has been like beautiful. Another beautiful sweep. So we have this low, boom, they both get swept. At this point, I'm not adamant about the trade because it's a what you call it low, a body sweep. So I was like, nah, I'm not interested in it. I saw this low here. I was like, oh shoot, wait. We got a candle sweep, a wick sweep here. So we see rejection. So this gets taken out right here. Fair value gap. Turn into IFEG disrespected by this bullish candle here. As soon as it closed, I entered, targeted buy side, as you see, and boom, caught the whole thing. Great trade. All right, US 30, another pair. Yes. All right, same thing. This is just a random regular gold block con. Sell side low. The low looked something like this, or it's like a wick low. Sell side liquidity. Boom, took it out. Huge rejection, beautiful rejection through the wick. Cool. We know it's a sweep. FVG here turned into an IFVG by this bullish candle here. They disrespected it. So boom, we already have our confirmation. I entered right here as soon as the candle closed because we already got it what we need to see here. So this is already A plus setup. This is an A plus plus setup now because after this candle close because we have a market structure shift. So what we could do is add another position if we wanted to after this market structure shift. So that's like just some examples of just how I think when it comes to trading. If you want to make even more money, you could add an extra position after the market structure shift because you know for a fact that it's an A plus plus setup. Like it was already an A plus setup after all of this happens. The go back time, the sweep, the IFVG, and you actually have clean targets to target, you already know it's an A plus setup at that point. Now you know it's an A plus plus setup after you get a market structure shift because then you definitely are switching structure, like it's complete reversal pattern at that point. An even better reversal pattern. So this is like a market maker, buy model at this point. You got all the points, the switch. And that's what all these are. That's another thing I'm gonna show you guys at the very end after I go through this last example. This is US 30. So the last one was US 30. This is US 30, and this is US 30. So I know there's a lot of you guys. Shout out to my friend says she trades US 30. So yeah, this is US 30. It works on US 30. We have buy side here. Beautiful sweep with the wick at a Goldbach 29 time. FVG turn IFVG right here. Price dropped. Wasn't adamant about that. I was like, I'm gonna just wait till it comes back. It came back up, and I entered here where it rolls back up to this fair value gap, this inefficiency. I waited for the pullback, got in on this candle. It ran back. I wanted a little bit of drawdown. It ran up some, but I already knew it was just retesting. A lot of the times, if it does run up, guys, I just want you to know it's gonna retest this IFVG here. So it'll retest it and then drop. Because IFVG is like a level of support or resistance. So uh, it didn't do it all the way here because you got the market structure shift. So it retested the breaker. I don't use breaker blocks, but that's basically the math of what happened here. Same thing here. It actually did it. See, it retested it. Uses support. Took off. Same thing here. This one, it just went straight to it. So you'll get times where it does it, and sometimes it just goes straight to it. Here, same thing. It used the IFVG as a support, which is why I already knew it was going to break through this, and that's why I did that. So yeah, sometimes it'll run back up. So I was hoping it would. It did. It ran back up. I got in right on this big candle here because I knew it was still going to drop, and it dropped and took out all these relative equal lows, and the sell side liquidity just dropped straight through it like that. But yeah. So that's something I've had. This is a little bit of how this works. As you see, again, it happened here. This wasn't at a Goldbach time that I usually trade. It's a Goldbach, probably a Goldbach time. It happened here. There was no IFVG to really confirm this though, so I wouldn't have really took this one because there's no IFVG. So that's the reason I didn't take this trade and this one. So you need to make sure you have everything: IFVG, the sweep, the Goldbach time, the liquidity target. Like you need to have like sound logic behind it, each trade. And it'll be an A plus trade, and it'll run just like this, very smooth. All right. But yeah, it's kind of like how a little bit more in detail of how this looks and how this works. The trades that I've taken, buys and sells, gold, US 30, things like that. So that's a little bit how this all works. I hope this is very insightful and this helps you guys out. I hope I gave really good examples. I showed in really in detail how this jump works and how I really like look and how I think with it and stuff like that. Well, yeah, if you found this video helpful, if y'all don't mind leaving a like, comment, subscribe, I would really much appreciate it. As well as check out some of the other videos on the channel if they help you out as well. Okay. Y'all have a good one. Appreciate y'all. I'll be dropping more videos for you guys soon. All right.